Don't do it, guys. Don't place trades based on what you see here. Please consult your own financial advisors and do your own due diligence. All right, with that said, let's go. It's Wednesday, October 17th, and it is a down day today, although barely. I'm only down about 170, 200 bucks or so from yesterday. This number over here is a bit inaccurate because it doesn't factor in, because it factors in the pre-market action, um, or doesn't factor it in. Either way, it's inaccurate. Um, let's see. So the options kind of went against me today. You can see over here is a lot of green. Usually I like when there's a lot of red. The call up, sometimes I don't mind if the call options are up because it means the underlying commodity the underlying security has gone up in value, which works out all right. Kind of thankful that EXK went up 1% today, even though the metals are flat to down. The markets are relatively flat, as you can see over here. SH, which is the market short, had about a neutral day. Real estate had a minor tick up apparently for the two real estate securities that I currently hold. Only two left. SIG is up 1%. C-SPAN flat. Not that eventful of a day. As you can see, the precious metals related stocks are pretty flat. Uranium was a bit down, except my boys Cameco. My boys up in there in Canada doing work, 0.5% up. Really happy about that, that it's stabilizing around this price. I could really make some money off selling options, selling puts on that. And in fact, a few of them are coming to a close this Friday, the 19th. So I'm very excited about that close today. I can finally collect my last, like, whatever, $6 or $8 or whatever it is, and I can reinvest the money. I could theoretically sell them right now, but I'd be paying a higher price because I think it sells in $5 increments. And unfortunately, I'm not that big of a player yet to be able to buy and sell higher amounts and um, where it would make, higher price stocks is what I'm trying to say, where it wouldn't matter so much if it was a $5 increment or not. But I'm not rich enough. Not rich enough yet. China was down 1.5%, and JD down almost 4%. It's getting close to that critical $22 level, which is where I have um, sold the put at, and Robinhood is refusing to load JD for some odd reason. I don't know why, but we'll go through right here. So the $22 put, and currently, if we click on JD, maybe it'll load now. There it is at 23.60. The put expires on November 2nd, so not too far away from now. It's currently worth $32. Hopefully that comes down to zero. So far, I'm up $8 or 20% on that trade. Well, that's about all the events that happened today. Oh, I do have a little bit of SDAO call that I bought. That might turn out to be a waste of money, a waste of $20, but we'll see. It's expires this Friday as well, so it has a couple days to do something in case the market drops a little bit. I'll collect a few dollars here. If not, I'll just lose it all. No big deal. It's 20 bucks. I make it up with the options calls from other places. Obviously, not good to throw money away, but it's just a tiny bit of hedge that I can just kind of cash into. Um, Shore in some of the beta losses there that I'm going to be experiencing from a market crash if it does happen between now and this Friday. It's just the market's been pretty shaky, so yeah, no, you know, just a quick account overview over here so you can see that almighty graph. I have a lot of cash collateral for the options. It's actually about 16,000, and some of this is not factored in for some reason. Um, if we take a look at the total returns, Apple's still a winner, followed by Energy Fuels, SIG, Cameco, Endeavor Silver, amazingly making its way up there, C-SPAN, Realty Income, UR Energy. All right, and then some of the top losers are the uranium, I'm sorry, the emerging market ETF, which we know EM's getting killed lately because of the high dollar, and that's really not helping the emerging markets with their financing. I've explained the dynamic multiple times in these episodes, so I forget which one it is, but you can go back and look. I think I even wrote it on the picture of the episode, so you can take a look at that. Let's sort it by equity. I'm most invested in options, followed by the uranium ETF, which is down $576 at the moment. It's my largest holding, followed by Apple, and then the EM and Cameco and Endeavor, followed by SIG, C-SPAN. So out of the my top like 10 largest holdings that you can see, I'm only down two, but it just happens that they're towards the top, which is not good. 3, 4, 5, 6, 7, 8, 9. Oh, the 10th was down too. Never mind. Well, it's not bad, but not down by a lot. As you can see, only $9. But anyways, that's a little update on the account. It's a nice little graph over here. Not super eventful. I was actually up on the day at one point. No big deal. We'll make it up. Time is on our side when we're option sellers, so I'm not too worried about that. I just want to get up to 40,000 because I've told myself that I'm going to put another $1,000 in there and invest it in some other contract once I reach 40, but I don't really want to do it unless I reach 40. It's going to be kind of like my reward. So once I get to 40, I can be at 41 and get the next $10,000 rolling. Get them rolling, get them started. All right. I don't have anything else interesting to say. I'm still thinking about what kind of trades I'm going to make and what my next move is going to be and what I'm going to be doing with that money that's going to be coming in off of my options put expirations on Friday. I'm probably going to re-roll them in Cameco again, although I'm not going to be able to get as much money as last time since the Cameco is a bit pricier now. I might have to set higher targets, which I'm not looking forward to doing. So I might explore other places. Hopefully, I decide to do it with stocks that I understand, securities that I understand, rather than exploring things with Switch and Ford and all this crap. All right, guys, that's it for today. I'll see y'all tomorrow. Peace out.